Good morning, guys, and welcome to the Nerd Report. I'm Jamie Tajera, and it is October 24th, 2022.
I'm Jamie Tajera, co-owner of Property Bear here in Jacksonville, Florida. This is Carrie Hustis, co-owner and sales leader. While Carrie runs all things sales, my day-to-day hunting investments and developments keeps me in two main places. In the field, checking out potential opportunities in construction, or on the computer researching hyperlocal data. So if you're looking for insight on Jacksonville real estate, you've come to the right place. Thanks for checking out our channel, and if you like it, please be sure to subscribe.
All right, guys, let's get into it. The Jaguars didn't do us any favors yesterday, and I'm sorry I missed last week. I was sick, but we are looking at the weekly chart for Duval, Clay, and St. Johns County. For the sales price, you can see that we've on the weekly, it's showing that peak at 375 in July. And then now we're at 350. So 375 to 350 is a little bit more than 5%. If you have watched our previous videos, you know that we're looking at we're projecting about a 10% till we hit a resistance level where the institutions start buying in again, because they were buying here too. But there's a certain number where their yield makes sense and they're like, hey, let's jump back in pretty aggressively. So right now we're at 350 from a median standpoint. Let's check out our active inventory. So active inventory is up a little under 6,000. Last time we were there was about April 2020. So let's check out our next days on market. So days on market, we're at about 37. Again, this is median. We really like the averages that we get from the monthly information. But last time we were around here was around June 2020. And then it started, declining through COVID basically. But yeah, so 37 days on market, it does take more time to get a home sold right now. There's a lot less people that can qualify for a loan. Pending sales. All right. So pending sales we're down to about 1,800 homes. Last time we were around here was December 2019. All right. A lot of people I've talked to are still under the impression that there's some sort of distress. The problem is, and this is why we're kind of predicting squeeze 2.0 on housing, is because the distress just doesn't exist. It's less than 1% of listings. If we run pre-foreclosures for the investment side, for properties for us to buy, there's none there. We run that data to try to find potential distressed properties that can be bought, or if these people need help listing their properties or whatever. There's not even close to as many as you think. List pendants, pre-foreclosures, none of that. Let's go to our closed sales number. All right, so our closed sales is about 1,800. Now you can see this up and down, right? January. It looks like we're working with some seasonality again, which is kind of a good thing to see. But nobody was worried about a crash January 2020 when we had 1,600 sales. So I am seeing a downward trend. I definitely am. A lot of whatever happens next has a lot to do with Fed policy. The thing is that the people that need to make moves because of life situations, death, divorce, distress, they still have to move, right? So if you had somebody that was buying a $500,000 house in March of this year, they're probably now buying a $300,000 house. And that's just reality based on the payment. The other side of it, one of the key things that we have seen and I haven't pulled it up on today's charts, but the rents for the entry level homes are going up. In the other markets, I would say the middle market and the luxury market, those rents are coming down. And if you know about Case Shiller and all that, where the index came from, 2008, Shiller basically said that the rents don't support the prices. Now, the entry level homes, the rents are continuing to go up while the prices are coming down, which is why we think the funds are going to jump back in pretty aggressively, which makes it really hard for people to get in. So, people, at least on the entry level, this is just my opinion. If you're looking at entry level homes, not financial advice, but I would consider having the conversation about getting in, because I do believe there will be a point for entry level homes where it's even harder than it was, 4 or 5 months ago. All right, let's look at percent of list price received. So we're still. This is a crazy chart because it looks like it looks like a stock market crash. It's like Black Monday or something. But people are getting about 97% of list price, which is normal. That's very normal. This stuff was not normal. What is this? June 21. May 22. That's not normal. This is way more normal. And you can kind of see there's like an uptrend here, sure. But what I'm used to from starting in like 2007, it's somewhere between that 95 and 98% of list price, generally. That's the average, that's the median number. And let's see, percent of cash sales closed. Yeah, so I said that, there's a threshold, there's almost a support level at which the funds are like, hey, let's jump back in. Because remember, if you're a home buyer, a traditional retail home buyer, you're buying a house, you have to go to the bank and get what is today a 6 or 7% mortgage. These hedge funds are operating on needing to pay off not debt, but investments that are happy to make 3% plus appreciation plus depreciation, right? So whatever their yield is, right? They're usually, what we've seen is they're looking for around 4 or 5%. Like, why are they only looking for 4 or 5%? Because they're making more in other things, right? And that's purely from a rental standpoint. We talk to rental investors all the time that are basically saying, we want a 10% yield. It's like, that's not going to happen because the funds are in our market and they're going to basically beat you out of those deals. Not to say there's not certain areas of town where you can find those 10% yields. But just keep that in mind. Their mortgage rate is much lower, essentially from a debt service standpoint, than the traditional home buyer, from the retail home buyer. So that puts us in a spot where for, entry-level home buyers, they're going to have some problems. So thanks for checking us out. This is the video for, the general market, Clay, Duval, and St. Johns County. Next month, we're going to do the monthly on Monday because it'll be the start of the next month. And I will also, some of you have asked for specific areas. So we will also be putting together the, one for kind of the major areas. We'll do probably the beaches, Arlington, St. Johns County, like Nocatee area. If you guys have any specific areas you want us to hit, just let us know. We've definitely got the beaches on the list. So thanks for checking us out. If you have any questions, let us know. We'd love to help the investment side, retail side, whatever we can help with.